you ever lean into that to give your clients, I guess, confidence that you can lead them through a storm?
Absolutely. So especially in the data center space, both on the sell side at the investment bank, covering some of the largest and best performing public listed data center companies, and also most importantly, had the experience of being as an operator, developing projects, very kind of hands-on, get dirty, get in the ground, all the way from building multiple data centers from scratch to the end. Most of our clients would find that very valuable experience. Essentially, we brand ourselves as a operator turned advisor.
You know, Tradesk, why do you feel it needed to exist? We all start with an idea, we fall in love with the idea. Tell us about how you thought, hey, you know what? I think this is a business.
Along the way, we have also realized that, especially my personal background in the data center space, there's a need on the institutional side, especially many new data center operators that are fairly new in the market, or some institutional investors that are also fairly new in the market may not have the specialized knowledge of a data center development all the way from end to end.
Speak to me about privacy, because we're talking finances, we're talking big institutionals, now you're talking accredited investors. Is there a risk from, again, 21-year-old vibe coding a trading app?
Whenever you talk about trading, the difference is if you are just trying to do that as a hobby, obviously you have all the freedom to do that as an engineer or as a programmer. As you know, financial services industry is a heavily regulated industry. You have to essentially become
I'm Garrett Wong, and this is the Investing to Win podcast. How do you define success, and what does winning look like for you? So Eric, you've got a lot of experience in Wall Street. What did you feel that experience taught you to become a founder?
Yeah, that's a very good question, Garrett. I think it's really Wall Street experience. The setting were a little bit different. Obviously, it's not very entrepreneurial. Typically, on a larger investment bank or a very large private equity backed joint venture or a public listed company. But I think what that led to me is I've seen some of the pain points by investors, both on the individual side, retail side, as well as on the institutional side. There are still some things that are not fully addressed or fully served by some of the larger banks, larger companies, which kind of led to where we are today, Tradesk Securities. I don't want to go too much into detail, but that's sort of in a 20,000 feet view. That's really what led to where I am today.
Yeah. So, I mean, obviously, I love learning. I don't love learning from mistakes. Let me qualify that. I don't like making mistakes, but we have to learn from them. If you were starting your personal portfolio again today, now knowing what you could tell your previous self, what do you think the even top 3 things that you might give advice?
Top 3 things. I would say number 1 is try to get emotions out of the way as much as you can. I know sometimes it's harder, saying than done, but really that's pretty much sort of the number 1, enemy for the investing, for not only, individual retail investor, but also institutional investors, which I was one of them at some point in my career. So that's number 1. I think number 2, really, you want to diversify your portfolio. You don't want to, so to speak, put all your eggs in one basket. You want to put into different names, different sectors, hopefully get a portfolio that's, well diversified, diversify some of the risks, either systematic risks or individual risks by certain industry or company, to the best that they can. I would say the third one is try to invest in something that you understand. Try not to, time the market. Try not to, pick individual stocks, because those are very, very difficult, especially for sort of, people, right? Average investor who only have very limited amount of time. But I think, I would say those are probably the top 3 from an investing perspective.
Do you feel a lot of people try to time the market? I mean, that's what people think that the market is all about.
Yeah, you can't resist, right? Because it's really, that's one of, a lot of people think that's part of kind of the incentive or joy or exciting part of investing. But honestly, when you think back, and I myself, when I look back of my personal growth, in the investing side, the mistakes that I made almost 100% were because of either chasing the market up or panic selling during a downturn of either the market or individual stocks. Again, trying to type the market, trying to beat the market, which almost never worked out in a way that's positive. But I think that's sort of really the number one, enemy. And honestly, being on the institutional side for a number of years, right, both on what we call sell side, which are investment banks, as well as buy side, hedge funds, private equity firms. It's as an individual investor, it's very, very difficult to beat the institutions, financial institutions that are doing this on a daily basis. The amount of resources they pour in, the best and the brightest people that they hire, that crunching numbers, taking advantage of all these sophisticated tools almost 24/7, right? But on the other hand, as an individual investor, you only have, 5, 10, 20, maybe an hour here and there just to do some research. It's really hard to consistently have an edge, right, over the institutional investors. With that said, I think, so how do individual investors, do it to keep up, right? One thing that you have a advantage compared to institutional guys is investment horizon. Again, being on the other side of the table for the institutional players, most of them, they have a very strict mandates, metrics they have to follow, either sometimes even weekly, monthly, quarterly numbers that they have to report to their shareholders, their boards, their investors, their LPs, what have you, right? Now, all those mandates, restrictions, or demands, requirements lead to sometimes short-term reactions, right? That would lead to not necessarily the best, outcome of the portfolio positions. However, as the individual investor, right, maybe, you'll have your wife to report to, right? But, on the other hand,
if you're not hiding it from her,
you can say, for example, have a 5, 10, even 15 years investment horizon where you can really take advantage of some of the mistakes in the market, because of emotions by others, right? Because of emotions or because of whatever reason, the short sort of factors that would lead to their trading activity. So as, individual investor, personally, I think that's one very critical advantage, that if you want to keep up with the market, just make sure that you have a plan, right? You have a tools to support your plan to essentially, trade in and out, without, sort of getting impacted by what's going on in the market volatility. Again, I know it's really hard, it's easier said than done, but I think, the better you can sort of exercise discipline along the way, I think the better you will be as an investor.
No, for sure. And I mean, what you said there was it really resonates with me, because how do you go up against an institution with hundreds of people, hundreds of traders, software, algorithms, not insider, but reports, right? We don't want to use the word insider when we're talking about trades. And to me, you either have to find a mentor, you have to have some tools, you have to have some guidance, especially if you're a hobbyist. And let's face it, anybody who is trying to trade without that behind you is a hobbyist. But that's why you're on the podcast today. Why don't we roll back a little bit? Tell us a little bit about your background and how you came to be here.
Sure, absolutely. So I have been on sort of Wall Street, different sides of Wall Street for about 15 years. Went to B school at NYU. This is almost 15 years ago, and then was supposed to work for Bear Stearns after graduation from B school, but you all know what happened there. Very interesting time. This is 2008. And ended up joining a hedge fund, fairly sizable hedge fund, $2 billion AUM back then, throughout sort of the very volatile 2 years during and after the financial crisis. 2008, 2009.
Mm.
And then later on switched to an investment bank as an analyst, research analyst covering telecommunication services, including data centers, wireless carriers, wireless towers, telcos, essentially sort of the telecom space. I ended up joining a publicly listed data center operator. This is more than 10 years ago, and on their capital market side. And also because of my engineer background, I ended up essentially going very deep into operations and being the president of one of their two major business divisions, a division called Data Center Infrastructure Group. Essentially, we were in charge of developing all data center assets, both green field opportunities as well as brownfield opportunities, including acquisitions, financing. That's kind of a very interesting number of years. And along the way, also brought in one of the top private equity firms and joined a joint venture, one of the largest data center development joint ventures in Asia. This is in 2015, 2016. And follow up with deploying over $500 million in capital, one that was still decent amount of money, unlike today.
I'd say so.
And we ended up underwrote quite a few high profile data center projects throughout tier one cities in Asia. And then unfortunately COVID hit, right, and then changed a lot of things, including internet. That's essentially the impossible to travel internationally, as well as some of the sort of market conditions that have changed along the way, and then which led to kind of Tradesk Securities. Tradesk, we established the platform about 4 years ago in the US, and 4 years ago we also have international operations in Asia, and so we are a global platform, primarily serving individual investors, high net worth individuals, as well as institutional investors. We in the US were in the process of building up a data center advisory practice, essentially sort of leveraging my background in the data center space, which, as some of it's been a very, very active industry, for the lack of a better word. Essentially, data centers have been supporting different waves of technology, a growth over the last 2 decades, all the way from internet to mobile internet to cloud computing, and now increasingly to AI. So data center is a space that has essentially been the infrastructure, right? The digital infrastructure that's supporting all those technology improvements, advancements. So that's kind of another area that we're in the process of building up.
Yeah, I'm taking tons of notes here. I find it so. I mean, the experience you've had, because a lot of people that come on the podcast who are into trading or they have a platform, that's great. But a lot of them started out as maybe, okay, I did really well at home, and there was a gap or something. Like you were literally right from like almost university level. What I found fascinating is 2007, 2008, you're basically starting in like a crisis. And then everything you've learned in, 12 years, and you're starting to gain momentum, and then COVID hits. What do you think are some, not to sound cliche, but I mean, those are some really, really tough times, those two pinpoints in time. Any lessons that you can share?
Yeah, so I think I kind of touched on part of that earlier, but I think if any lesson we learned is you just have to be tough, right? You got to sort of stick around and get through the tough times, and also learn as much as you can, right? Because these are, I would say, unusual times. I mean, I would think, personally looking back, if you had the experience of going through some of that, then those would be very, very good learning, lessons that you learn, experience that you can subsequently, apply to your future decision making. Because you have seen, the volatile times, how things could get pretty bad. And then how some of the investors, their behavior, right, as a result of some of the sort of a tough, environment, and then subsequently what you would be able to do if something like that were to happen again, or in planning for that, what would you do differently for your, professional practice or even personal wealth planning. So there's really just a lot of things that you can learn and you can essentially subsequently utilize and leverage accordingly.
Yeah. Do you find, I mean, we all use, in business, entrepreneurs, USP, unique selling proposition. Do you ever lean into that to give your clients, I guess, confidence that you can lead them through a storm?
Absolutely. So I think I'll give you an example, especially in the data center space. That's something that I've had, pretty, solid experience, both
Well,
on
you're an
the
engineer
south
too,
side,
right? So,
both on the south side, at an investment bank covering
yeah.
some of the, largest and best performing data center, public listed data center companies, and also, most importantly, had the experience of being as an operator, data center operator, developing projects, very kind of hands-on, get dirty, get in the ground, experience all the way from building multiple data centers from scratch to the end. And so those, some of our clients, most of our clients would find that very valuable experience. Essentially, we kind of brand ourselves as a operator turned advisor that would be able to offer our customers perspective from the operator side, right? How to run, how to develop projects, and also from capital side, how to underwrite a project, how to look at the risks, how to
Mhm.
do due diligence, how to do contract negotiation, how to satisfy your customers' customization requirements. So a lot of things, some, not all of our clients had the direct experience on, and that's exactly where we can sort of offer value.
Yeah. So, I mean, this is really all about founder interviews, as I told you in the green room. Trade desk, why do you feel it needed to exist? Because that's really, we all start with an idea, we fall in love with the idea. Tell us about that little spark and then how you actually thought, hey, you know what? I think this is a business.
Uh, so Tradesk, I would say, we started off focusing more on the retail side, or high net worth individuals. I think the
Okay.
original idea is we see a gap in the marketplace, especially for busy working professionals, right? These are people not necessarily in finance, but people have been building up their career in other professions. For example, pharmaceuticals, it might be a lawyer, an accountant, a marketing executive. These people, they have decent amount of discretionary income. They obviously they want to do well financially, but they don't necessarily have the expertise or time to be allocated to do trading, to do investing. But in the meantime, most of them that the kind of clients we talk to, they have the desire to. So that's sort of the niche need of the market where we have, based on our experience of all the founders and engineers, and we have come together with the platform with tools that essentially filter out a lot of the noise, right? We don't want to swamp or overwhelm our customers with all sorts of tools, right? Because there are a lot of them in the marketplace. But we have handpicked and selected quite a few tools that leveraged a few very important, investing theories that we have mentioned earlier. For example, how do you avoid market timing? How do you
Mhm.
avoid picking individual stocks? So as a result, we have designed tools such as recurring investments, thematic trading, as well as AI, based engine that's fully integrated to each and every investor's customer's portfolio that can monitor and analyze the risk for your portfolio. So these are, the tools that we have designed as part of the Tradesk platform. This that we believe satisfy the needs from these working professionals who do not want to be overwhelmed by hundreds of products, right? many sophisticated tools that they do not understand, most of the jargons, what they are. So that's kind of the origin of the idea of Tradesk. But also along the way, we have also realized that, especially my personal background and in the data center space, there's a need on the institutional side, especially many new data center operators that are fairly new in the market, or some institutional investors that are also fairly new in the market, may not have necessarily the specialized knowledge of a data center development all the way from end to end. All right. So that's kind of where we would be able to offer value or differentiate ourselves, with a lot of traction, actually. The amount of energy interest in the data center market, it's overwhelming, but primarily supported by sort of the demand by AI, right? Be either AI training or inference, or increasingly AI applications that's specifically designed for certain industries. So that's kind of where we are today, in a nutshell. Quite a bit. I wear quite a few hats, both the investment platform for retail high net worth individuals, as well as the institutional, where essentially a boutique investment bank, building out that practice.
Yeah, so I'm trying to wrap my head around that. So you start Tradesk, you're talking retail. I totally get that. But how does your platform and then your expertise in AI data centers, how does that come together in a platform necessarily? Because when I think platform, I'm thinking, okay, buy, sell, stops, high and low, guardrails. And yet you're now being able to pivot slightly to institutional. Maybe clarify that for me.
For sure. That's a very, very good question. So just because we are actually we are a SEC registered broker dealer and member of FINRA, so we have to follow a lot of regulations. And then for the retail side versus the institutional side, these we intentionally for now silo them separately.
Okay.
The retail side pretty much follow what we call self-directed approach. Who customers can sign up, as a client, as a customer, and then take advantage of the tools that I mentioned earlier. That they can essentially utilize those tools to design their portfolio, to look up ideas, or look at investment themes along the way. On the institutional side, those are more traditional investment bankers, relationship building, working with clients, a high touch sort of approach. But I think down the road, we also have planned to, somehow combine them together. For example, we have planned to offer maybe at some point, accredited investors, right, on our platform to potentially access some of the data center investment opportunities that our investment banking side it's working on. But obviously, a lot of things have to come together from a compliance, from legal.
How do you vet somebody online for that, right? I mean, that's is that scalable? Like to actually
it is scalable. It is scalable. We have seen certain platforms doing this, but still fairly fragmented space, very fragmented space. But hence the opportunity, right? So that's kind of a little bit down the road. We're not quite there yet, but this is one of those kind of projects. Once we build up, we have built up the trading part of Tradesk, the platform part. We are in the process of building up the investment banking part, and once both of them are in a decent shape, then hopefully we'll be able to sort of combine them, merge them together into a platform that would leverage both sides of the business.
Yeah, it's fascinating. You said that Tradesk was sort of born around 4 years ago. Did I hear
around
that correctly?
4 years ago?
And so, I mean, I know AI was out there, like, so for my listeners are like, Garrett, AI was before that. I know AI is like 30 years old, but 4 years ago, really, I mean, maybe two and a half, three, we were talking about ChatGPT. How have, because I have an AI implementation company as well as my property management company. So I'm like all in. I'm kind of not at your level, but this Trade Desk is not some 21-year-old that vibe coded an app, right? Can you talk to me about the dangers? I mean, there was just Anthropic just released yet another model yesterday, but I found it interesting because now it says we are actually keeping your data for a month, right? And we're not going to train our models on it, but we're keeping your data, right? And so I've never seen that type of thing. Speak to me about privacy, because we're talking finances, we're talking big institutionals, now you're talking accredited investors. How does that, or is there a risk from some, again, 21-year-old vibe coding a trading app?
Yeah. So, whenever you talk about trading, right, applications, if you, I think the difference is if you are just trying to do that as a hobby, obviously you have all the freedom to do that, right, as an engineer or as a programmer. But if you want to start touching the area of servicing other customers, right, essentially we are squarely in the sort of financial services industry. And as you know,
Regulated,
financial
right?
services industry is a heavily regulated industry.
Yeah.
You have to essentially become a broker dealer. You have to obtain certain licenses. You have to have the
Yes.
compliance personnel, legal, registered representative. There's a lot of things going on right behind the scenes before you can put together a platform that say, hey, look, this is something that we can open up, put on Apple, iOS, Apple Store, and then, open up to a lot of customers, especially retail customers. So, obviously, SEC, FINRA, our regulators, have put out together a lot of regulations, right? Laws and regulations, securities laws. And then we, as a broker dealer slash fintech firm, we all have to follow. So that's a tall order. That's actually pretty high barriers to entry, just because you have to combine, regulations, laws, and along compliance along
Mm-hmm.
onto a platform that also user friendly, that's well designed for UI UX, that satisfies users' needs, sort of addresses their pain points. So I think that's sort of the challenging part.
Yeah, no, it's going to be very, very interesting. I want to transition a little bit because just AI data centers. I'm a little so I'm up in Winnipeg, Canada, and our premier, I think last week, just turned down a data center contract. And personally, and I'm agnostic. I don't want to say which party or all those types of things, but I personally found it very short-sighted. I mean, I understand there's resources and there's water and there's hydro and, things that are going to be used. But then I look at the economy, the way the world is going, the jobs, the trades. What is your opinion on, without trying to be biased, because you love data centers, but the impact on a city, on a town, on a municipality?
Yeah, so I think the impact is real. Obviously, you mentioned quite a few different sort of components of a data center, right? You need power, a lot of power. It used to be, when we were developing pretty much top of the line data centers, we were talking about 4 kilowatts per rack, 6 kilowatts per rack. That's a high end. These days, you basically add a zero. Sometimes,
Yeah.
20 times, 30 times of that capacity, and then you times that with 100, that gives you a data center these days, easily draw 100 megawatts, 200 megawatts in power. Sometimes you start to see the gigawatts design in data
Mm-hmm.
centers. Those are obviously, they consume a lot of power. It's just, how data centers are. And then, depending on what design you have, it could consume a lot of water resources as well. There's potential pollution issues, and so on and so forth, right? So that's sort of the costs, right, to support a data center. I mean, it's understandable that especially certain municipalities, certain states, location, they just have a not in my backyard sort of mentality,
Yeah,
right?
NIMBY. Yeah.
Yeah, they want, obviously, everyone sees the demand, sees the benefits, sees the efficiency, the productivity that AI tools can provide. But a lot of people, they understand all these AI tools, they are supported by data centers. However, the conflict really is, I want the data center, but not in my backyard. But still, how do you get that solved? So I think a few different areas that we have seen. One is that engineers, they worked really hard trying to come up with designs that's extract as much efficiency as possible, so that there's as little sort of a power wasted during the process of supporting the AI applications workloads. So that's one. The other is, for example, water resources. There are newer innovative design that essentially consume little, if any, water at all. During the cooling process, there could be, for example, liquid cooling that's closed loop that doesn't use much water, and then all
No,
these liquid
exactly.
gets
That's the thing
reutilized.
that's what I thought. Like, why it's not like you're dumping it. Like, surely the water is going to get hot and then it can cool and then it can come back around. I mean, we have radiant heating systems for hundreds of years already. Why is this any different?
It's This is a kind of a long, long story.
We don't
Because
have to
data
go down that
centers,
rabbit hole, but
right,
it's very
right,
interesting.
yeah. I mean, a lot of things are new, right? The really high density, GPUs,
Yeah.
led to high density, data centers, and then which resulted in sort of the liquid cooling. But even 3-4 years ago, all these data centers, they were designed on sort of millions of gallons of water to be consumed every single day, because those were air cooled, right? Utilizing water as sort of the coolant. But these days, increasingly, because of the need, they are becoming more, again, more innovative designs using closed loop coolants that are not water, that can be reused very easily. But we are at very, very early stage of that. We're literally in the first inning of that. I think there, as more and more demand come online, people, companies, operators, developers, they'll find innovative ways to to address, right, those concerns, because those concerns are real.
So when we talk about an investor point of view, okay, whether it's retail or it's institutional, I mean, AI is new, right? There's a platform that's coming out probably every second. If I'm a traditional investor, where is the advantage for me to, like, just back to basics, right? Like, let's say, again, I'm 55, maybe I'm a high net worth individual, and I'm like, hey, you know what? I'd like to invest in this little thing called AI. How do you sell that to somebody so that the stability, like, what is the investment thesis on that?
It's, without diving into any individual stocks, obviously we're not here to provide advice,
Just general overview, right?
recommendations. But AI, I would say you want to look at the big picture, right? You don't want to necessarily dive into individual stocks, but you can invest in, for example, ETFs
Right.
that might leverage, that has coverage of the sort of different, the downstream, upstream, right? Vendors, suppliers, right? The entire sort of value chain for AI,
Okay.
because that's a huge value chain,
Yeah.
end to end. And
You're investing in the growth of the infrastructure, basically, not necessarily an AI tool that's going to take over the world.
that's one way to do it.
Okay.
Or there are some potential ETFs that would allow you to kind of tap into all of sort of the value chain of the AI, all the way from applications to chips to infrastructure to data centers to power generation. It's just one way to kind of to go down that route of investing into the AI space.
Yeah, I'm sorry, I'm writing notes here. This is really, really fascinating. I wanted to, when we talk about AI, take your normal LLM. okay, it's almost pre-programmed to agree with you, right? Everybody's like, no, it gives me opinions. Like it will agree with you, right? And the more, it's like you go on Facebook and you can find that group of people that's going to have your opinion. I find that a lot of the LLMs are like that. And if you agree with me on that point, how do you prevent an LLM or AI powered investment platform to steer you in the wrong direction, to be too optimistic about things?
Yeah, that's a very, very good question. I mean, for example, for us, in our AI integrated Prism engine that we have designed, there is certain guardrails, right? One investor asks certain questions, then certain disclosure or certain sort of confirmation would be given. So, for example, give you an example. If a customer asked the AI engine, give me a recommendation of the best performing stock in AI, then obviously the engine is designed not to provide that because there are certain things that's highly regulated, what we can or cannot do. Just to give you a quick example. But I think really as a user or investor, you want to leverage the productivity gain from AI engines, from AI tools, rather than trying to do shortcuts, get the best idea, right? I think, at least personally, that's my view. As a former research analyst, I wanted to give you a real world example. We used to spend, days, if not weeks, in order to come up with a industry deep dive of a specific sector or company that we can publish to our institutional clients. This is not even 10 years ago. Today, the same product, almost similar level quality, takes minutes, right?
Right.
But you got to be careful. Not all the answers provided by AI are necessarily accurate or are necessarily correct. So you got to watch out, right? Essentially use that as a tool, but not as the sort of the perfect solution. That's I would say, utilize that so that it can save time for you to avoid or to, kind of remove the manual labor, hours and hours of time that you have to spend otherwise. But on the other hand, make sure you review the results, you look at the results, very kind of carefully. I think that's sort of what I would recommend at this point.
Yeah. I want to talk a little bit about the business itself, if you don't mind. In terms of, it's already 4 years. That's a very long time already for, it's clearly not a startup anymore, but maybe tell me, for a new user, when you guys are looking at your KPIs and your metrics, what does a good, successful first week look like for a brand new user? Like, how, you guys are probably measuring that, but can you quantify that for us?
For us, it's a little bit difficult to quantify just because, our user base is fairly diverse, right?
Well, let's just say retail then. If you could just pick out that one segment, because that's easier.
Yeah, even retail, right? Some of our users are relatively large, and versus some of the other use, for example, they may, a user may come in, open an account, and then subsequently deposit, hundreds of thousands of dollars, and maybe transfer over, from other brokerage account, to us. But on the other hand, there might be some other, investors that are relatively new to the investing world. Open up an account and then, deposit, $500, $1,000 just to sort of test the water. And then, leverage our, tools and then, put in a few sort of investment ideas to test. So, it's really hard to say overall there's a certain type of investors, but, we kind of, we have all sorts of investors who on the retail side.
Could you can you see signals that somebody might churn? Because we're talking MRR as well as, I imagine there's some fee structures in there, but can you kind of predict that based on patterns?
Sometimes we can. Sometimes we can. Obviously, we get to see, the customers' trading behavior. For example, if a certain group of customers all of a sudden, reduce their trading, there could be a few different reasons, right? Could be the market volatility, but if this is a statistically significant group of investors, then we may want to dive a little deeper. Is it because of certain services from our platform, or certain patterns, or maybe fee schedule? So that we may even reach out to certain customers. Hey, look, if there's something that we can help improve, to kind of better serve you.
So let's talk retail, sort of a case study, and then a beginner. What should a beginner focus on in the first 30 days to build good habits, just in general?
First 30 days. I would say, so
Am I asking too hard questions, Eric?
No, not at all. Not at all. These are very good questions, very practical questions, right? Especially for, new investors. I would say try the paper trading, right? You don't even have to put real money to work. We do also have a paper trading tool, which essentially using the same data sets as the other sort of stocks in the market, but instead of real money, we give you sort of a virtual money, essentially paper trading. You can do tests, do trades, essentially twofold, right? One, even before depositing any money, our customers would still have access to paper trading tools and all the other tools that I've mentioned earlier. They can start researching stocks, researching ideas, or utilizing the Prism AI tools to kind of test the water, and also without putting in real money. And then that's one fold. The other fold is just get familiar with, if you are someone who's brand new to trading, right? Just get familiar with how you put in a trade, right? How you put in an order, how order gets executed, what kind of orders, is a market order, limit order, right? Stop order,
the basics,
and stocks, options, ETFs, right? Some of the basics, and you can learn without essentially, spending a penny of your real money. But once you get comfortable, a little bit more comfortable, then maybe you can deposit some money and put into real kind of real stocks. But beforehand, if you're talking about this is a brand new customer, a investor, first 30 days, first months into the investment world, he or she can easily get overwhelmed, right? So thousands of tickers of stocks. There's ETFs, ADRs, there's options, right? But you got to start from somewhere, and you got to start in a way that doesn't kind of cost you money right away. Potentially, minimize your risks. I think that's the proper way to say it. But I think that's kind of where I would recommend you start.
Yeah, it's great advice. I actually had a lady on my podcast about a year ago, and she became a trader after, I think, 30 years as a lab technician. And after she retired, she literally practiced for an entire year before she even made. And of course, I think it served her well because she came on the podcast because, she was teaching people how to do this as beginners. It's been a great episode. I have two questions left for you. One is sort of high level. When you talk about like the market 10 years ago, what do you believe now that you no longer believed 10 years ago? That you no longer agree with, right? Like, what do you believe about the markets 10 years ago that you no longer agree with?
Wow, that's a pretty hard question, actually. I would say people are today, investors, even retail investors, they are smarter in a way that they have access to tools that not even the sophisticated institutions used to have 10 years ago, right? We're talking about AI tools that can help an investor cut through information, within seconds or minutes, right?
Right.
That, even the sophisticated institutions could not do that 10 years ago. So that's one big change. In other words, what that means is the speed of information being digested, reflected in the marketplace is faster, than 10 years ago. So if someone, is believe that they can kind of find opportunities because of information asymmetry, I think that's going to be becoming increasingly difficult in the age of AI. So I think that's one big difference. I would say the other is quant trading, right? 10 years ago, there was quant trading, firms, but not as much as today. I don't remember the exact percentage, but I think more than 50% of today's trading volume are all driven by quant trading engines, algorithm trading firms, engines, increasingly AI-based engines, right? So that's one big difference, especially from the overall percentage-wise today versus 10 years ago. So that's something that would have implications, all sorts of implications. So I think these are sort of the two things that come to mind.
Yeah. No, that's amazing. All right, final question, and all my guests know that they have to answer this question. I really want to hear what you have to say. So, Eric, this is the Investing to Win podcast. How do you define success, and what does winning look like for you?
I think winning is really if you can come up with a system for yourself that that you're happy with, that does not wake you up in the middle of the night, and also help you with your overall portfolio performance, and also incorporate into sort of the lessons learned along the way. I think that would be a successful sort of a result.
Okay. And winning? Well, what does winning look like for you personally?
I don't know if you play golf, but I'll use golf as an analogy. So in golf, there's something called, boring golf is best golf. If you can hit pars every single hole, boring pars every single hole, you would have, beat 99% of the golfers out there. Even if you hit bogeys every single hole, right, you would probably have beaten, with a 90 total, right? You would have beaten
for sure.
85% of the golfers out there. So I guess the point is you don't have to pick the best stock, that gives you 5, 10, 20 times returns, but watch out for the stocks or the ideas that could wipe you out, the investment out, right? The very sort of the bad shots in golf.
Yeah.
I think managed risks is just as important as finding the best idea, if not more important. And then once you do that on a consistent basis, you will see that you will do pretty well.
Well, what you're talking about there is not being emotional about your, being very level-headed, not taking risks. And I think that is fantastic advice for anybody who's getting into investing. Again, Eric, I'm going to put Tradesk and its, how people can get in touch with you on the show notes. But thanks so much for hanging out with me. This has been a great interview.
Yep, thank you so much, Garrett, for having me. It's a pleasure.
All right, take care.